What makes Portfolio Pilot different?
The very simple answer is we use AI and what we call hedge fund inspired models to be able to give completely automated, personalized fiduciary financial advice.
This is the first time in my life I've ever heard the expression monthly continuous tax optimization. I saw that on your website. I'm like, okay, I got to ask Alex about this. What does that even mean and how do you achieve it?
I came across this one study by JP Morgan that said that if you do monthly tax loss harvesting, you could increase your annual return by 1.98%.
And it sounds like Portfolio Pilot takes care of everything. So Portfolio Pilot is watching your positions. It knows there's a position that's underwater. It says, hey, why don't you sell this position? It figures out like what kind of a tax advantage you might get from that. It knows it has to wait 30 days. It automatically recommends a slightly different or different enough security to trade. And it keeps an eye on all that.
Exactly.
That's crazy. Wow, that's amazing. Okay.
You can sort of think about, financial management or financial advice, wealth management as like, a set of 1,000 rules like that. And you could think about Portfolio Pilot as sort of this codified database or set of rules that's constantly searching for these little optimization opportunities. And then, we're going to surface the ones that are actually meaningful.
Typically, give me an average number when somebody first signs onto your platform. What is the average portfolio score?
If someone has been managing their own account for a little while, typically we see something like 700 or so. One of our goals is to try to have just the tax optimization part of the product pay for the membership. If everything else that we provide ends up being free because, the tax optimization piece pays for itself, that seems like a no-brainer.
This is the Money Seed Podcast, where we discuss all things investing, plain and simple, the way it should be. Please remember, this show is for educational and entertainment purposes only and is not intended to be investment advice. Welcome back to the Money Seed Podcast. My guest today is Alexander Harmsen. Alex is the CEO and founder of Portfolio Pilot, and it's a revolutionary product where AI meets financial advice. Alex, welcome to the show.
I'm happy to be here. Thanks for having me on.
Alex, everybody knows people who are financial advisors. Financial advisors are never hard to find. What makes Portfolio Pilot different?
On one hand, very easy to answer that question. And then there's actually a much more complicated answer. I mean, the very simple answer is we use AI and what we call hedge fund inspired models to be able to give completely automated, personalized fiduciary financial advice. So that's the simple answer. The slightly more complicated answer is that, in many ways, we're exactly the same. We are also a registered investment advisor with the SEC. The system has a fiduciary responsibility for any of the advice that we give. Even though, me personally, I have to write the Series 65 exam and become an investment advisor representative so that I can sign off on algorithmic changes, in the model that we have. There's a certain amount of investing advice that we give, and, it could be as simple as, you should take on a little bit more of SPY, let's add some S&P 500, ETF into your portfolio, or, your exposure is off in this asset class, and here's very specific things that we can add for you. And so in that sense, we are allowed to give very specific financial advice. Where it starts to differentiate, besides the obvious, it's completely automated, the entire AI element, is that most financial advisors are just putting you into some standard fund that their, asset management fund manages. And maybe they personalize it by, separating people into conservative and, aggressive, and maybe some blend between a conservative fund that's mostly bond and a more aggressive fund that's mostly equities. But besides the risk profile, it's, not that often that you see real personalization where we can take what's happening in markets, where your specific net worth breaks down real estate that you have, and what's in your brokerage accounts, if you have a crypto wallet connected, 401k, IRAs, Roth, jewelry, cars, whatever actually is part of your net worth and your balance sheet. And then we combine that with a whole set of different personalization settings, different questions that the system asks you to be able to actually offer that kind of financial advice. And then probably, the other big difference here is that we are not managing your money for you. And so maybe for some people that sounds like, it's too much. I like the idea of just giving my money away to someone else, just removing the headache, let someone else deal with it. But I actually think there's a massive growing shift of people in the US that are self-directed investors, that are DIY investors. And I'm not talking about, day traders. There's obviously a world of those people as well. I'm talking about, I think 80% of Americans that want to be somewhat involved in their finances. And, I think those people would benefit from a real advisor without conflicts of interest, or at least as minimized conflicts of interest as possible, reducing the human bias involved. And so what we try to do, for some standard monthly membership is give people personalized financial advice that you can decide to act on or throw away. And the more you act on it, the smarter the system becomes, the more personalized it becomes. The more you hit ignore, the smarter it becomes, the more personalized it becomes when we serve up the next set of recommendations for you.
And so that makes sense because on your website, it says that you guys have over $20 billion assets on platform, as opposed to most financial advisors will have AUM, or assets under management. And that's, if I understand you correctly, it's because you don't actually manage the assets. You just say, hey, you're the user, you're the client, you tell me what you own and what you're managing. I just give you advice on what you're managing yourself.
Exactly. And no matter how little you add, no matter how much of your net worth you add, it's the same standard $29 a month plan. And, with this membership, it's sort of a la carte, however much financial advice you want to consume. I think the standard pattern for most of our users is, once a month, we send out an email saying, here's 3 very specific recommendations for you, given your situation and settings, that you can act on in the next 10 minutes. And our general MO is we're not trying to pull you into the product more often than that. You go live your life and hobbies and work and family and, whatever else you have going on. You should be able to improve your financial situation with 3 things once a month, and that's it. And it's everything from, you're with your latest paycheck. Here's where you should be putting your next $2,000 into the market, to increase your risk-adjusted returns, to get closer to your risk match, to rebalance your portfolio, to increase your downside protection. It could be, here's a tax loss harvesting opportunity, right? And a lot of people think about doing tax loss harvesting just at the end of the year, but if you do it throughout the year, you can get significantly more gains because the natural volatility of the stock market. It could be,
Yeah, Alex, let me touch on that. Sorry, let me ask about that, because this is the first time in my life I've ever heard the expression monthly continuous tax optimization. I saw that on your website. I'm like, okay, I got to ask Alex about this. What does that even mean, and how do you achieve it?
So I think, a lot of this goes back to just 3.5 years ago. I'd sold my previous company, also AI. We ran that for 6 years and raised about $30 million and expanded internationally and all that. 2021 was sort of the first time that we had any sort of real liquidity, and started a family and bought a house in the Bay Area. And I started talking to financial advisors and wealth managers, and just couldn't quite stomach paying the 1%, 1.5% fees plus potential conflicts of interest. And I don't know, there was horror stories all over the place and just couldn't quite get comfortable with that. I spent a lot of time reading about, what could I do? What are different optimizations that I could take advantage of? And I came across this one study by JP Morgan that said that if you do monthly tax loss harvesting, you could increase your annual return by 1.98%. And that's crazy, right? Like this is like if you have 6% returns in a year, like instead you could have 8% returns. I mean, it honestly felt wild to me that this wasn't the number one thing that people talk about on every podcast in the world, on every article. It's, I think when I started looking into like, okay, how can I do this? It wasn't a very difficult concept. You need to know what your cost basis is across all of your securities, and it needs to happen on a lot by lot basis. And, multiple people have different accounts, and robo advisors do this continuously throughout the year. And so that, when I looked at Betterment or Wealthfront, that was the number one value prop on their website, right? Tax loss harvesting, they're talking about increasing your returns by 1%, 2%, 3%. It varies a little bit depending on what analysis you do and what time period. But the general idea here is that, if you're just dollar cost averaging into the market, you have 24 paychecks in a year, and you're putting, I don't know, $1,000 into the market twice a month throughout the year, just into an S&P 500 index fund, and, VOO or SPY, your dealer's choice. At the end of the year, the chance that that fund is down is pretty low, actually, right? Generally, markets go up and to the right. If you take 2024 as a good example, at the end of the year, all of my SPY positions, my own portfolio, were up for the year. And so there was zero tax loss harvesting opportunity, right? Because the general concept of tax loss harvesting, sell it when it's down. And then instead of just having a hole in your portfolio and sitting on cash, you can just trade into a similar but not substantially identical security, right? But you need the position to be down. And so if it's up, great, unrealized gains, but you can't take advantage of tax loss harvesting. If you think about it on a monthly basis, there were 3 periods in 2024 where the S&P 500 was actually down from when I bought one of those lots, twice a month throughout the year. And so in those 3 moments, I could have taken a small tax loss, traded into something similar, maybe instead of S&P 500, an all equities fund, broad market equities fund, and kept a very similar exposure, taken advantage of the fact that it went up, but I could have booked those losses. And then at the end of the year, come tax time, truly just counted against my income tax. There's a certain allotment of up to $3,000 that you can count against income tax, or count it against any capital gains, or use it for tax-free asset, rebalancing. And so the idea that we are already aggregating all your accounts. We are, obviously pulling in transactions and the cost basis. We have an eye to markets. It's not that difficult to put those different concepts together and look at your lot by lot cost basis, compare that to how the market is currently doing as part of this monthly, reminder to you, say, look, if you sold this position, this developed markets fund, today, you could get $600 in tax credits. And then, the second step of that is not that difficult to, extend that concept to, here is a list of potential replacement funds. Here's other developed market funds that don't hold exactly the same mix of underlying securities. And we even rate it for you. We say this is 92% the same.
That's
and
amazing.
So, we say roughly if it's more than 97% the same, then it probably violates the wash sale rule. But, there's something about like just automating that process, even just a little bit, guiding people through that. It feels like one of those things that feels like a known thing that you should take advantage of. But, just the tools just haven't been available to individual investors until now.
That's amazing. Yeah. And so just to get some of the terminology out of the way. So the wash rule is this idea that if you sell a security, you can't buy it back within a certain amount of time, correct?
Yeah, exactly. I mean, obviously the IRS frowns upon the fact that like you could just sell something, book the loss, and then buy back into it immediately, right? And so they basically say, look, it has to be a real trade. And so you either need to sell it and then sit on it for 30 days. And then on the 31st day, you can buy back into the same security, or, you sell it and then you can trade into something that's similar, but not exactly the same.
And it sounds like Portfolio Pilot takes care of everything. So Portfolio Pilot is watching your positions. It knows there's a position that's underwater. It says, hey, why don't you sell this position? It figures out like what kind of a tax advantage you might get from that. It knows it has to wait 30 days. It automatically recommends a slightly different or different enough security to trade. And it keeps an eye on all that.
Exactly.
That's crazy. Wow, that's amazing. Okay, very cool.
Yeah, and I mean, you can sort of think about, financial management or financial advice, wealth management as like, a set of 1,000 rules like that. And you could think about Portfolio Pilot as sort of this codified database or set of rules that is constantly searching for these little optimization opportunities. And then, we're going to surface the ones that are actually meaningful, right? There's certain thresholds, or we're not going to tell you, if there's a $4 tax loss harvesting opportunity here. At a minimum, one of our goals is to try to have just the tax optimization part of the product pay for the membership. If everything else that we provide ends up being free because, the tax optimization piece pays for itself, that seems like a no-brainer. And then, there's estate planning and thinking about long-term retirement readiness. And how do we think about disbursements in retirement? And how do you think about downside protection properly, and asset allocation and rebalancing, and efficient frontiers? And there's all these things that feel like obvious things if you're in it, that, regular people like me, just want a system to say like, okay, Alex, this is what you should do, today.
And it sounds like Portfolio Pilot does all of these, right? You're talking about like, you look at your asset allocation, how exposed are you to real estate, precious metals, to the S&P 500, to foreign equities. Like it takes a look at all that. You also mentioned retirement planning. Like, can you do pro forma statements and figure out like where you're going to be in 10 years, 20 years, that kind of thing? Can you estimate your retirement income? Like, is that a part of the package as well?
Yeah, exactly.
I mean, you're just nodding along, but like, it's
part of it. Exactly. Yeah, I mean, I don't know. It kind of felt to me like some of these things are available online, right? I can go to NerdWallet and use their retirement planner to figure out, set a certain retirement budget and add my net worth. But am I going to do that every single month? I actually want to run a few different scenarios and what if analysis, and okay, how do I think about Social Security as part of that? And what about long-term inflation? That's going to screw with my retirement budget and healthcare expenses and insurance and pensions. And so the idea that like you can do all of that in one place, it almost feels like every single time we say like, okay, we want to add something new to the platform, and it feels like, oh, we've already done 90% of that, because we have all the rest of your information there and all the financial information. The idea of doing that all in one place, I actually think is a huge part of the reason why the financial advisor world has actually been as successful as it's been. It's very low churn, really high retention. And I think for most people, it's just easy to go to one person to get all that, net worth all in one place. Think about long-term retirement planning, but also what should I own? Which stocks or ETFs or bonds should I own right now? Right? How do I connect the dots? One of the craziest things actually that I think is just like this, it almost feels like this extra bonus that ends up being very helpful for a lot of people. Very few people search for this, but when they find it in Portfolio Pilot, they really like it. And it's our estate planning piece of the product. And so, we will as part of the onboarding, or as part of like, if you start using it more and more, like we will ask about whether you have dependents or not. Do you have small kids, teenagers? depending on your net worth, depending on which state you live or which country you live, we'll come up with basically a yearly checklist of estate planning items and remind you, like, you have 2 kids, you should be thinking about guardianship for your children. Or like once in a while, you should be refreshing the beneficiaries of all of your accounts. That changes. Or if you buy a house, suddenly there's a whole bunch of additional work thinking about, an executor or your trust. Did you know there's a big difference between a living will and a last will and testament? It's some of these things that we just don't think about, but it's useful that, in your life, you have a guide to remind you of these things once in a while, both initially to set it up, but also, over time.
That's amazing that you guys were able to bring estate planning into the product as well. So what does the onboarding look like? So I imagine I have to get all of my various accounts and trading accounts and kind of somehow link it to the platform, right? Because the platform has to have almost a real-time view of my assets.
Yeah, so for most people, we've actually timed this multiple times. It's been one of our goals, how do we get people onboarded as fast as possible? Used to take an hour or two to link accounts and import stuff and manually type in information and statements and everything like that. On average, we've brought it down to about 4 minutes now. And so, we're in 2025, the state of consumer apps and, fintech and the ability for people to do things online is kind of amazing, right? In many ways, we're standing on shoulders of giants, and your eyes make me think that, this is some crazy effort, but in some ways it just feels like sort of the natural digitization of, a relatively antiquated industry. And so the onboarding process, typically people go to portfoliopilot.com, they sign up, email address, create an account, and then there's a 10-step questionnaire. And, it's simple stuff like your risk profile and, do you care more about overall growth or increasing your income, fixed income or dividends, even things like, do you think you can beat the market? And if you don't think you can beat the market and you're more focused on passive investing, we will set you up with the standard market expected returns based on betas and volatility calculations. If you do think you can beat the market, maybe you can use, the forecast that exists within Portfolio Pilot. But it's up to you, right? We think there's tremendous value, even if you don't think, even if you completely believe in the efficient market hypothesis and you don't think that there's any potential, juice to be squeezed, as an individual investor, leave that to the hedge funds. 10-question onboarding. We ask you about, there's some tax information that we ask you about income and tax filing status. Taxes thread through everything, right? If you're going to sell something and you're not calculating the tax impact, probably you're going to be surprised at the end of the year. So this is 10 questions, typically click, 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 click. And then we ask you to connect at least one brokerage account or import at least one brokerage account, right? Because as you can imagine, a lot of the recommendations and advice and analysis comes from, so where are your investable securities? It could be, 401k, it could be your Robinhood account, it could be crypto account. And we can automatically import that through Plaid or Yodlee or Snaptrade. These are services that have been used by hundreds of millions of Americans at this point. It's fairly standard across all these different apps. Or you can import just a statement. You say, I'm not quite comfortable linking my account yet. I can simply just import a statement, or even just upload a screenshot of your statement. It could be a screenshot of just your holdings data if you don't want information about your name or your account number or anything like this. You can simply just, Control A on your brokerage account and copy and paste it in. And, we have an AI that parses that and will import it in properly. And then, that can take, a minute or so. And then, a little bit of magic and you come into the app and we will tell you, here's your portfolio score. Here's your chance of retirement success. on the path that you're on right now, here's how it breaks down to your risk match and risk adjusted returns and your downside protection. For the next year, this is our expected returns, given market conditions and macro for the next year. Here's a breakdown of different asset classes. And then all of that's free. You can add real estate and jewelry and cars and other accounts and cash accounts and credit cards and anything like this to sort of flesh out the rest of your profile. And then the core portfolio tracker, is completely free. That felt like a sort of, standard part of our onboarding. And then, obviously we're going to say, you have a score of, 802 out of 1,000. There's some room for improvement. You should sign up for a 2-week free trial of our gold offering at $29 a month, and we'll give you actual personalized fiduciary financial advice.
Amazing.
And the idea there is that, this is sort of, this is this a la carte menu of different options in which you can improve anything I just mentioned.
That's amazing. So getting back to the portfolio score, I believe it's a number between 0 and 1,000, if I remember correctly. Yeah. Typically, give me an average number when somebody first signs onto your platform. What is the average portfolio score?
Oh, that's a good question. Typically what I see, if someone is has been managing their own account for a little while, typically we see something like 700 or so. I think it's kind of like a credit score, right? It's people generally are not completely out of touch with their risk preference, right? They know roughly, what they're comfortable with. I think that, when people think about downside protection, I think they're often just thinking about, sort of a good mix between bonds and equities. And then risk adjusted return really comes down to for the level of risk, are you getting enough? Are you getting the highest possible expected returns? Right. And so I don't know. Once in a while we encounter someone who's like, I have no idea what I'm doing. I'm signing up for the service because I need direction. Should I go north or should I go south? Truly help me out here. But I think the vast majority of people come to us because they are doing pretty well. They feel fairly confident, but they know that there's inevitably something that could be optimizing. And so the idea of getting a second opinion from an AI, one, it's kind of exciting. Let's see what the system spits out. And two, I think we could all use a second opinion. It feels obvious in the medical world to, get a second opinion. If it's serious and going to impact my life, let's get a second opinion from someone else. But it feels like in the financial world and financial advice, it kind of feels like, no, I have my guy and I trust him implicitly, and why not get a second opinion? And so, one of the things we're debating right now is maybe we want to run some big advertisement, get a second opinion. Is there anything here we can find out? And the idea that it's all free, there's a 2-week free trial, you can cancel anytime. I'm super biased, but it seems like a no-brainer to me to give that to people. And then obviously we believe strong enough in our product that that will hook people and they'll want a second opinion next month as well. And continuously get financial advice as you go along.
And I think that's a great way to position the product because everyone should get a second opinion, whether it's your health or whether it's, whatever it is. And it seems like it's a second opinion at a very reasonable cost. Kids, I think the downside, what's the downside that, you're out like $30 or something, as you try the product and you don't like it. It's a very low cost considering how much of a benefit you might get and how much usage and, you might get out of it. So I think it's a great value proposition. I think the one question I got to address here, and I'm sure you get this quite often, is if somebody's uploading all this personal information or, all these bank accounts, whatever, what type of security protocols do you have in place and privacy policies?
Yeah, it's a great question and something we've worked on a lot. We put up a page, just a security page, and we can link through that in many different places within the product. And I think that's helped a lot, just explaining what we do. We talk about bank level security. We've got an external, penetration tests, and everything that we have, whether it's in transit or static in our database, is encrypted using, standard bank level, 256-bit encryption. We have access controls. partly just being a registered investment advisor, having this fiduciary responsibility. We have a massive compliance manual. It's like, I don't know, 400 pages or something like that. And I think 20 or 30 pages are dedicated to security and regular audits and, quarterly this and access controls. Absolute pain in the ass, but critical. I actually think, like, when we originally went through this whole process, I was a little bit worried it's going to slow us down and we're going to have to add disclosures all over the place and get people to, agree to client agreements. We have to serve up documents on a yearly basis. We need to do public reporting of certain information. But I think one of the things I've really come to appreciate throughout this process is that 80% of this is building trust with customers. And so the fact we actually have A/B tested, on our landing page, for example, certain disclosures, there's sort of you can have a minimum set of disclosures to barely meet the compliance obligations, or you can have the full set of disclosures, right? And almost every single time, the full set of disclosures ends up leading to higher conversions. And, I think throughout the process, sometimes it's worth just slowing people down, asking a little bit of additional information, partly so people feel like, okay, the system truly understands me. I think the other big part of this is that, if we're linking accounts, we only have read access to those accounts. And so even in a worst case scenario, if someone gets access to this account information, they can't make trades on your behalf. That's a really big deal for people. Once we made that very clear that this is read-only access, you can keep this up to date and synced on a daily basis or weekly basis, but no control, no ability to execute trades or move money or anything like that. That helps a lot with security concerns. And then I also think that there's sort of just a natural generational shift and people start getting comfortable doing things online. And the fact that, we're not the first online bank or online, financial service. And so we're sitting on top of 10 to 20 years of, fintech infrastructure. We get to use some of these other services that are trusted, like Plaid, right? I think they have something like 20 million people who have connected accounts, hundreds of millions of accounts, something like this, right? Like the scale of that and the level of security and compliance is wild. I mean, I can't imagine doing this 10 years ago.
I love the product. I love the idea. I love the value proposition. Where can people find you and the company, and what steps should people take if they're interested?
As straightforward as possible, portfoliopilot.com, sign up, create a free account, sign up for a free trial. And the number one thing that we're working on at the moment is simplifying this entire process. We are, like you said, we have about 25,000 users now, $20 billion of assets on the platform. And so it's clear that we found something here. It feels like we've tapped into something. Almost everyone I talk to says, conceptually, that's really cool. And now, does it work the way I expect it to? And so, I think one of the things that we're really trying to do over the next year, speed up the performance of the system, make sure we have broader data coverage, improve the importing process, make it easier for people to find stuff in the product. Once we give you recommendations, the ability to fine tune that a little bit, say, oh, that's a great idea, but I'd like something a little bit adjacent to that. And so this whole notion of sort of mixing hedge fund inspired models together with AI actually allows us to do a fair amount of personalization and interaction with the product. And I'm really excited about that. And so, leave feedback, contact me directly. Very happy to respond to calls. Even today, I do about 2 user interviews every single day with, existing customers, existing or churned customers. Sometimes the people leaving, have much more insightful things to say, a little bit angrier sometimes, but so useful to try to understand where we missed the mark. And then every single Monday we do new releases. And so I think people are shocked at how quickly things get fixed and how quickly we add new features and potential new product requests. It's honestly, it's really exciting. And then there's like this notion of like, if we come across new optimizations, like add it to the list, right? And the product just keeps getting smarter and smarter and smarter, keeps searching for these different things that it could optimize for you.
Amazing. All right, so I'll put those linked into the show notes, portfoliopilot.com. Definitely go check it out. Alexander Harmsen, thank you very much for joining us today.
Excellent conversation. I loved it. Thank you.
Hey, thanks for joining us for another episode of the Money Seed Podcast. Please remember to click like and subscribe. It really helps spread the message to other investors and it helps attract new viewers to the show. We appreciate your support. Thanks very much.